So this look. Okay, that's weird. So hold on. This one. This one might not be plugged in. Right now it's this one.
Yep. Oh, wait a minute. Hold on.
Hello?
Yeah.
Yeah, this is
Okay.
working.
Oh. There we go. Okay.
Hello? Okay.
All right. There we go. Okay, are we ready? So I have your questions here. It's kind of a two-part one is really what it is. What do you want to start off with?
Maybe we just talk about the general.
Squirting. Oh, I was going to say, if we go into the fires, that goes right with your question here.
Yeah, maybe just go into the general, how things going at Pacific Private Money, and that'll go into, we're having a really busy Q4,
Okay.
but we had one last year, and we get,
Okay, sounds good. Great. There we go. Well, welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Fond of Pacific Private Money. And hopefully Ed Diaz will come into the studios pretty soon. He knows we're recording, so that rascal, he'll be here soon, hopefully. Okay, our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. And those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is entertainment. A little different than random trivia.
Yeah, I hope it's modern entertainment. How far back are these questions?
Let's see. One's pretty far back, the other one's pretty far back, and the other one's not so far
Is that
back.
like Charlie Chaplin question?
No, not quite that far back. Close, but not bad. So, Nam, you work at Pacific Private Money in the Business
Yes,
Development Department. There's some exciting stuff going on.
Yeah, in my role, I spend a lot of time out in the marketplace. I go to a lot of events, real estate conventions, as well as mortgage industry conventions or events. And, it's picked up. Business has really picked up. And maybe that's just because as we wind down the year, people want to get into homes before the end of the year or before the holidays.
Is it primarily homes, or what about investment properties?
A lot of what we've been getting lately are residential owner-occupied loan requests.
And you're one of the few companies that actually is licensed to do
Yes.
private residences.
Yeah, it takes a lot of different licensing, but also a lot of just experience
Okay.
in that. We've got the people on our staff. So we're one of the bigger private lenders in terms of staff and resources. So it's the consumer owner-occupied loans is something that we can do because we have the people for it.
And generally speaking, why would someone who wants to buy a home go to you, private lender, versus a regular bank?
Yeah, great question. It's not something they want to do. Oftentimes, it's something. It's a solution that it becomes necessary because they can't get a conventional loan. So it's typically because we are contacted at the 11th hour by a mortgage broker or realtor because at the last minute their conventional loan is not going to work out, or in the case where they have a home on the market to sell and they're also making a purchase, the timing of those two can't happen simultaneously, and conventional banks can't make loans on 2 properties for a borrower oftentimes.
Yeah, a lot of times borrowers don't qualify for 2 mortgages, and also banks are not very good at cross collateralization.
Right, which we do, and other private lenders do as well, but something that we see all the time. We get clients from mortgage brokers who send it to us. And what happens is, and this deal of the week we'll talk about later is a bridge loan.
Okay.
What happens is we are able to provide a loan to complete the purchase, and then they pay off our loan once they sell their first home.
Okay.
And right now the market's still going strong throughout the Bay Area. Inventory is still low. That's what I'm hearing from our realtors and some of these realtor events we're going to. And markets like the East Bay or Oakland, it's still a hot market with less inventory. Still a strong buyer demand out there, and you're seeing multiple offer situations.
And where does Pacific Private Money get its money?
We get our money from investors, a lot of high net worth accredited investors throughout California, throughout the Bay Area, who are looking for higher returns.
And what kind of higher returns are you paying?
We're paying between 7.5% and 8%.
Okay, so if you guys are paying 7.5% to 8%, and you guys don't work for free, that means you got to charge fees or a higher interest rate or both.
Sure, to the
Okay.
borrowers,
To the
it's
borrowers,
9-10% along with origination points and fees,
Okay.
processing fees.
So, like you said, people generally don't. You're not the first line of defense.
Right.
They'd rather go to the bank and borrow at 3% or 4%.
Absolutely, and if they can, they should. We're Plan B, we're option 2, and we there's enough deals that fall out from conventional loans that keeps us really busy.
Well, that's what I was going to ask you. It sounds like in order to keep you busy, there has to be a lot of loans. It's not just a one-off, once in a while type situation.
Yeah, it has to be a lot because we also are conservative. So we say no 9 out of 10 times. So imagine if we're, a thriving business, yet we're saying no that much. We really have to have a large volume.
Give me an example of why you'd actually say no to.
Well, again, focus on, and we try to emphasize is that we come in where there's transactional distress, not necessarily borrower distress.
Okay.
It's a scenario where we might turn down a loan is the borrower is, shows a poor history of payments. We're not credit driven, but we do look at their credit score. And if they're just going from, bad scenario to bad scenario because of poor decisions, it's somebody who would more than likely say no to.
Okay. Or maybe somebody who's wanting too high a loan to value. A lot of banks will do that.
Right.
Will do that.
Or we'll get investors who will come in who took a fix and flip class from one of those seminars, and they'll say, "Hey, I just found this house at like 110% financing." It's like, no, you don't have any experience, and you don't.
Well, you guys don't do 110% on that kind of scenario anyway.
Yeah.
All right, we're going to cut to our first commercial break here. Here's our trivia question. Who did Lionel Richie duet with on the 1981 smash hit Endless Love? All right, so who is his duet partner? Call 888-912-1190. If you're the first caller with the correct answer, you're going to win that free tanning certificate. By the way, I want to make a quick mention here for Driven Raceway in Northern California's premier indoor kart racing and family entertainment facility. If you've never done it, it's a lot of fun. You feel like you're in a real race car. You get to wear a helmet and a race suit just like they do in the pros. They also have a little glow-in-the-dark mini golf course and a mini bowling alley. That's a lot of fun. Check them out at drivenraceway.com. Don't touch that dial. The Best of Investing is going to be right back. I keep hearing that. I don't know what that is.
What time is the
Oh, there it is.
next one?
Okay, so that was 6:40. Next one's 7:28.
Okay.
So let's save this.
No word from.
Mr. Diaz, no. It's funny because literally this morning I reminded him and he confirmed and said he said, "Oh, this is the email that you use."
Driven Raceway. I think that used to be Malibu Grand Prix, wasn't it?
Malibu Grand Prix is Redwood City. This is in Rohnert Park.
Okay.
Yeah, but I don't Malibu one in Rohnert Park, did they?
I don't know. I remember it's off the side of the freeway, right?
Yeah, it's like I think it's like near.
It's not. Is it indoor?
Yeah, it's indoor.
Oh, okay.
Yeah,
That was
that's
different.
that's what it's.
Okay.
It's actually very fun. And you got to get yourself seatbelted in there.
Yeah.
When you turn that
Pretty
thing,
fast.
Yeah, you go a lot. You feel like you're going a lot faster than you really are.
It's amazing how fast 20 miles an hour can feel.
When you're because you're so low.
Yeah.
Yeah, and you're taking all those turns and everything.
How old do you have to be?
You can be pretty young. Could be, I think, 7 or 8.
Oh.
I think. Yeah, you can always call them up. Right.
7 or 8. Wow, that's not bad.
I think. I honestly, I don't remember. It could be 10.
Okay.
How old's your daughter?
9. I'll have to get her a fake ID. She can do that.
That's funny.
Maybe we'll just wait.
Yeah. Okay, we can continue on. We might as well go into deal of the week because you were, starting to mention it.
Yeah, sure.
And away we go. Well, welcome back to the Best of Investing. Again, I'm Edward Brown, your host, along with my special co-host, Nam Phan of You are special. Non-fund of Pacific Private Money, and we're still waiting for Ed Diaz of Movement Mortgage. That rascal, where is he? Ed, we need you. Okay.
Are you listening to the radio? Oh wait, you won't.
Yeah, that's right. That's right. Yeah, because we are pre-recorded today. That's why we're not taking any live callers, except for the trivia question. It goes into the machine, and then we listen to it, and then announce the winners, or email the winners. Okay. Here was our first trivia question. Who did, because entertainment is the theme. Who did Lionel Richie do a duet with on the 1981 smash, #1 smash, "Endless Love"? My endless love.
Were you just doing the woman's voice?
Yeah, that was a woman's voice.
Diana Ross?
Yes, it was.
Right.
Yeah, I do an excellent Diana Ross.
You did. It was because of you. I know. That's wonderful.
I hear a symphony. You know what? When I was 4 years old, I used to listen to that record all the time. Come home from preschool, put that record on. I hear a symphony from Diana Ross, and then also listen to Frankie Valli and the Four Seasons. Let's hang on. Anyway. Okay, now we get down to business here. So, Nam Fon of Pacific Private Money, you're in the business development department. We're explaining that Pacific Private Money lends money to people who need short-term money,
Yes.
who for one reason or another can't get it from the bank.
Yes.
They're not distressed. The properties may be in some kind of situation that
Exactly.
Okay.
Yeah.
So give us an example. Give us a deal of the week.
So we recently just closed a loan, and it's actually a year in the making. So we're fast.
Wait, a year in the making?
Yeah, actually, it's a year in the making. But what happened was a year ago, we were approached by a woman who wanted to purchase a home to be closer to her family, her kids. And she was moving from Tuolumne to Placerville. So she was making offers on properties in Placerville a year ago. And there was one particular that she wanted, but they lost out. So
on bidding
on that property.
Gotcha.
So
Okay.
she was pre-approved with us. We were ready to go. She was going to put her house on the market at that time, but she lost out on that opportunity. She subsequently, over the last several months or over the past year, she made offers on other properties.
Okay.
What she learned though was that property that she made an offer on came back on the market. So
it fell out of escrow from the other person?
I don't know, because that would be a long time. Perhaps it fell out of escrow and the sellers decided to hold on to the
Oh,
property
that's
and
possible,
then put it back on the market same time a year later.
Gotcha.
I think that's what happened.
Right.
So she recently, when that house came on the market, came back to us
Right.
and wanted to make an offer on the property. I can believe the property was 575, something along those lines. And she had all 100% equity in her home in Tuolumne. So we were able to make a loan at 105% of the purchase price.
Wow. Okay. What was her house worth in Tuolumne?
In Tuolumne, I think it was in the 500s, really close. The same amount she had a down payment. Or no, I'm sorry. She didn't have a down payment. She had more equity in the house that she had in Tuolumne.
Gotcha. Okay. So when you did cross collateralization using both houses, her loan to value for you guys was in the 50%
Yeah,
range.
exactly. It's
Okay,
hovering right
that
around
makes
50
sense.
or a little over 50%.
By the way, when you said year in the making, is that like one of the signs of the zodiac, like the Chinese New Year? Year of the rat, year in the making?
Yeah,
Year of the monkey?
yeah. The what making is.
Wow, that's pretty good. Okay, so wow, that's interesting. Okay, so what was the interest rate that got charged on that?
Interest rate was high nines.
High nines,
Nines.
okay, and
Yeah.
a couple of points.
Yep.
Okay, and she was happy to get, but wait, why would she need you rather than go to the bank?
Because again, it was a situation where her home wasn't on the market.
Ah, gotcha.
So now she can put her home on the market, and she's got time. It's a bridge loan, which is less than a year, and she's going to put her home on the market. And once she sells it, she's going to actually pay us off completely.
Okay.
So she's not going to even need to refinance. So in this case, there won't be a conventional exit. She's just going to pay us off.
Interesting. So the bank necessarily doesn't, in that case, wouldn't have necessarily looked at, gee, can she afford the mortgage payment on the new loan? They would say, wait a minute, we're not going to give you 100% or 105%
Right.
of that. Whereas you guys could, because of the fact that she had the equity in her old home,
Right.
and the banks don't take two properties as collateral.
Right.
I wonder why they don't do that.
Yeah, I don't know. I don't know if there's
Too much paperwork.
don't tip them off.
Yeah.
course, they're looking to listen to the show every week to learn the little nuggets.
That's right.
Infiltrate our business, right?
Well, you know what's interesting? I got to say that in talking to bankers and trying to understand what goes on in their brains, even if there's deals that are fairly good, if I understand it correctly, one of the reasons they rely so much on a FICO score is that they don't want to be in a situation where they are looking at a loan that is most likely going to be paid late, or even if they know they're not going to end up with the property, because once that happens, they have to tag it as a troubled loan. And if that's the case, then the feds, FDIC and all that, make them put up extra reserves, and that's money they cannot lend out. So even if they have a loan that on its face looks pretty good,
right?
It's too risky from their end. If anything goes wrong, that loan's going to cost them a lot more because they have to put money aside that they can't lend out.
Got it. Yeah, that makes sense. And also, perhaps for us, it can be a sizable amount of business as private lenders.
Yeah.
But for the bank, perhaps it's just not on their radar in terms of potential.
Yeah, that's
volume.
true. Yeah, there's enough quote normal situations for them to do. Okay, very good. All right, so we're going to go to our second trivia question here, and again, the theme is entertainment. What movie earned John Wayne his first Academy Award? I'll tell you, Pilgrim. Do I have to do John Wayne, or do you know who John Wayne is?
Yeah, I got that. And both your version.
Oh, okay.
I'll call you John.
Call me John. There you go. Okay, what movie earned John Wayne his first Academy Award? I didn't know he earned more than one, but maybe, at least this is how he got his first Academy Award. Call 888-912-1190 for the first caller. Correct answer, you're going to win that free tanning certificate. And by the way, I also want to make a quick mention here. Coming soon, you don't have the commercial yet, but the Transcendence Theater in Luther, Burbank, which I guess is fine after the fires, December 1st, 2nd, and 3rd, Broadway Holiday Special. We're going to get into more of that next inning. World Series here. Don't touch that dial. The best of investing. I'll be right back. Yeah, look at that. All right, we go to email time?
Oh, yeah. Oh, and then later we'll talk about the fund webinar.
You've actually gotten some calls off the radios?
Yeah, last week we got a couple of calls, which is great. Oh, how long is this next one? Sorry.
This one is 8:40. Ready? All right. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. Second trivia question was, what movie earned John Wayne his first Academy Award?
Was it The Searchers?
Never heard of that movie.
Oh, really?
No.
That was with Natalie Wood.
Oh,
When she was
young.
Yeah, really young.
Okay, now this movie was just recently remade.
True Grit.
True Grit, that's right. Way to go, Pilgrim. All right, True Grit, that was the answer. And again, just want to make a quick mention again for the Transcendence Theater in their performances. They've done at the Marin Civic Center, the Jack London in Glen Ellen, which, gosh, I don't know how that property's done. But again, all the stuff that's causing the fires, which we'll get into with email time for you. It's leading right up to that. But anyway, I've seen these guys perform a couple of times, and they are fantastic. It's at least as good as what you'd see in Broadway. Very, 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 very good performances. It's called the Transcendence Theater, Luther, Burbank. At December 1st, 2nd, and 3rd, they're going to be doing the Broadway holiday special. So they do like Broadway themes and stuff like that.
Okay.
It's very fun. Okay, so now emails came in, and this one says, this guy actually is a shareholder in the fund. It says, as a fund shareholder, I was wondering if there were any properties in the fund that were affected by the fires in the North Bay. And two, it's kind of a two-part question. what happens in the event a property is damaged or burns down as a result of fire?
Yeah, no, great question, and we fielded many calls. And we'll talk a little bit about our next fund information session, then we'll kind of touch on this a little bit. But essentially, we were lucky. Thankfully, we did not suffer any loss from that. We had one loan on a property that was just land. So it's a construction job that hasn't started yet, and essentially it was just land and it was dirt, grass. So there was no damage there, and none of the other properties that are in the fund were affected. So,
okay, so the first thing is good news. From your guys'
Thankfully,
end, thankfully, is no loans were no property in the portfolio of loans that you had was in danger. But two, let's just say something did happen.
Yeah, so we're insured. I mean, you have insurance on those types of things, and it's required. We require it, as part of the, part of our requirements for funding a loan.
Okay.
That the borrower have insurance for fires. So if we had, we would have been covered.
Okay.
If we had experienced damage or loss.
Sure.
It's we're into the second week or third week now since the fire started.
Yeah.
Yeah, there's still a lot. The recovery is going to take a long time, and something that we want to talk about is we have fund information sessions every month. This next one will be by webinar, so it's not going to be at a location; it's going to be online.
Okay.
And so if people are interested in listening in or attending, go to our website, and it's posted there under events.
And the website is
PacificPrivateMoney.com. It's www.PacificPrivateMoney.com, and they can attend our fund information session. Most of the times, we just talk about the structure of the fund, how we generate the returns, what's the what are the requirements, risk, all of those things. And this one in particular, we're going to focus on those things, but we're also going to talk about now that this devastation happened in Sonoma and Napa counties, what does that mean for us as private lenders? Certainly there's going to be a lot of rebuilding and recovery going on, and there's going to be a lot of construction. I think over 6,000 properties were damaged, homes and businesses. So, we want to talk about that. We want to say, looking forward, how's that going to impact? There's going to be a lot of construction, and we will be there to help with the rebuild.
The interesting thing is, unlike the Oakland fire in 1991, which was in the hills, a lot of these properties were on flat ground.
Yeah.
So from a building standpoint, there should not be, as many hurdles from that end of it. And if I understand correctly, the counties are going to fast track, or they're going to be very generous in their permitting process.
Yeah, I imagine. Yeah, I think that's going to be the case. I mean, I don't know if you saw. I haven't been up there yet.
I haven't either. I'm scared to go up there.
Yeah, we were talking about going up and supporting the businesses, eating at restaurants and things like that up there. But probably let a little bit more time pass. But just watching some of the videos, like that one the Berkeley Fire Department posted on Facebook, where they're driving through that neighborhood, coffee neighborhood or Coffee Park, and it was just incredible to see. It was flattened. It didn't look like anything that existed there.
Yeah, a lot of people say it looked like a war zone.
Yeah, it was crazy. So there's it's going to take some time, but we're
I'm thinking, like, from your guys' standpoint, okay, so some people are probably just going to take the insurance money and,
right.
Well, of course, they have to pay off their mortgage, which would be either you guys or the bank, and maybe just, go away, go to Oregon or something.
Right.
Some people probably want to rebuild in the same neighborhood. And I'm trying to think of how that would, I gotta think that there's just going to generate a lot of business for everybody.
Yeah, there's going to be a housing boom just because there has to be a replenishment. There's already a shortage of housing in the Bay Area, so to compound that with several thousand structures and several thousand people being displaced, families being displaced.
Because it happened all in one shot. It wasn't like slow trickle.
Right. So we expect in the next several years, because of the size of the losses and damage, that there will be construction activity for quite some time, and there's going to be need for funding.
It's interesting because as much of a capitalist as I would call myself, I do agree with the gouging laws that basically say, as I understand it, that if there's been this kind of an emergency disaster type situation, you're not allowed to raise the price more than 10%, and that wouldn't be the sale of a house, would be more than renters. Yeah, and I agree with that because I mean, who needs to be that greedy to take advantage of people? Specifically at that time.
Right. Well, and you hear about rents going up, or gas prices, or water being sold at higher costs. That's just that's just egregious.
I mean, I remember hearing a story with I'm trying to remember if it was the 9/11 situation. I think that's what it was. And at first there was a Starbucks, and the fireman came in, and the employee basically was charging them for the water, and at first it all hit Facebook and everything about, or whatever it was back then for social media, about how evil Starbucks was. But if you think about it, I mean, here's this employee who she's responsible to. It's one thing to be able to say, call the owner and say, is it okay if I give away water in this project? But it's not up to her to just make decisions on behalf of everyone else. You know what I mean? Yeah. But as it turns out, Starbucks ended up like saying, hey, listen, we're sorry about the situation. She didn't have the authority, but we would love to give, such and such. So that actually turned out a little bit better. Okay, now this one you'll probably know the answer to because you have a daughter, right? Mm-hmm. What is the name of the crab who looks after Ariel in Disney's The Little Mermaid?
No.
I had to ask at least one question that has to do with kids. All right, call 888-912-1190. If you're the first caller with the correct answer, you're going to win that tanning certificate. Don't touch that dial. The Best of Investing is going to be right back. I figured you knew that one.
I don't know that one.
Oh. Come on, Under the Sea.
I know, we never saw that.
We never saw that.
No, because how old is that? It's like 20 years old, isn't it? It's almost
more than that.
It's
yeah, about 20 years old.
That's crazy to think that's 20 years old.
Actually, it's older than that because it's, I think, 1990s. I think it's 27 years old. Yeah,
that's crazy.
Because I remember watching it, and before Christian was born, because we went over to some friend's house, and the kids wanted to watch it again, so that's how I remember it. So, now this I don't understand. So Ed Diaz says he didn't have it on his calendar, and oh, by the way, he's sick with the flu. But yet this morning, I mean, I understand the sick with the flu. Maybe that's why he did, because I confirmed with him that he was coming in today, and what's the email question, and he gave it to me. So that doesn't make sense. So maybe he's being delirious right now. Poor guy.
Let's see.
Not the question?
Yeah. I don't know. Yeah.
Okay, so
how long is this next one?
This next one is 917.
Okay.
What do we want to cover?
Good question. 17. But maybe let's see. So what else on the fund? I can continue a little bit on the fund about.
Like go to the risks and accredited.
Yeah.
Sure.
Yeah.
Good. Welcome back to the Best of Investing one more time. I'm Edward Brown, your host, along with Nam Phan of Pacific Private Money. Third trivia question. I thought Nam was going to get this, but kept them in suspenders here and didn't quite get it. Okay, what is the name of the crab who looks after Ariel in Disney's The Little Mermaid? You got to remember, under the sea, under the sea, under the sea.
I know it's. No,
Come on, you have to know the answer.
I don't know it.
Sebastian.
Sebastian
The
Yeah,
crab.
we were just talking about during the break how long ago that movie was.
It's got to be 27 years old.
That's
or
a
longer.
long time ago.
Yeah. I know. Pretty amazing. Yeah, I was 30 when I saw it and I cried. Okay. Okay, earlier in the show, you were mentioning that Pacific Private Money has a fund, which, by the way, what's the phone number? People have questions.
Yeah, the phone number to reach us is 415-883-2150.
Okay. And PacificPrivateMoney.com is the website. Okay, so now you mentioned that the interest rate that you charge the borrowers on, let's say, the personal residences they want to buy is somewhere in the 9.5+% range and a few points.
Right.
And you guys don't work for free, so although you'd love to.
Yeah.
So what do you guys charge to manage the fund?
Yeah, so there's a management fee. It's 2% of assets under management,
Okay.
but there's alignment of interests in terms of
Explain that.
the fund manager's alignment with the investors. So there's a preferred return that investors earn, which is 7%. How are we able to, or how do they earn 7.5 to 8 on an average? Is essentially beyond that 7%. You take out the management fee.
Okay.
The fund shareholders, the investors, as well as the management, share in the difference, that spread otherwise, and in the origination fees that are charged, and in the document and processing fees.
So now that is kind of different because there are a lot of funds out there where the fund manager keeps the points.
Right. Some
You guys
funds,
split it.
yeah, some funds just say, listen, you're going to get a fixed X%. Let's just say 6% or 7%, regardless of how the fund does.
Okay.
So if the fund's earning, the investors only get 6 or 7%. And some investors are fine with that. In our case, we split and share in what's called EDC, or profit at excess distributable cash.
Okay.
So when we earn more, the fund investors or shareholders earn more beyond the preferred return, and that's where that
alignment of interest is.
Yeah.
Now, before the show, we were talking about how the Pacific Private Money Fund is actually going to, in the future, be able to probably provide a little higher return to the investors. Something about this new portal you guys come out with.
Yeah, so we'll be launching very shortly. Actually, it's live now, but if you go to www.privatemoneyloans.com, you'll see that that's the platform where we will be selling some of our loans from, out of not just loans that are in the fund, but loans that, because the fund only loans on about 40% of the total loans that we fund as a company. The other 60% are lent on through individual trustee investors. So we're going to be selling some of our loans on privatemoneyloans.com.
Okay.
And we're going to keep a little bit of a spread. Right now, we only have a few properties on there, a few loans on there. So give us time. It's really in beta, at the moment. But beta. So we're just launching it. We're going to work out the kinks, log in. They have to create an account, and they have to be approved. But once they are, they can start seeing loans that we're selling. And we're going to sell it at a slight spread. We're keeping that spread, and if that loan was one that was in the fund that we're selling, that spread goes back to the fund. And
so I'm actually
goes
on the
to you.
website right now.
Mhm.
I see very nice website, by the way, privatemoneyloans.com. Here's one that says 290,000 first trustee at 7%, single family residence, less than 55% loan to value, seasoned loan, meaning that it's not a brand new loan. It's got a payment history.
It's a performing loan.
Performing loan, 14 months worth of payment history, fully renovated downtown Napa rental, which again, I'm assuming didn't get hit by the fire.
Correct.
And let's see here, the investment, the term is 10 months. That means, I guess, it's got 10 more months to go.
Right.
Oh, it's a 2-year loan.
Mhm.
14 months plus 10 is 24 months. Gotcha. Okay. And so it's only 290,000. So yeah, I could see where the property's got to be worth $500,000-$600,000.
Right. If
Okay.
it's what was that, 55%?
Yeah, it says a little less than 55%, so it's probably a $600,000 property, which still sounds pretty cheap nowadays. And wow, that's a pretty good yield,
Yeah.
7%.
So people may be asking, why are you selling loans out of your fund, or why are you selling the loans?
Okay.
And part of it's to create liquidity. We'd like to use the proceeds to make other loans.
Which you earn points,
Yeah,
which you share with the
points.
fund.
Exactly.
And then if you keep a spread for the fund, in theory, the more you can turn over, you can start boosting that yield to the fund pretty fast.
Yeah, and there are investors, whether they're fund investors or some of our note investors, who would like an opportunity to invest in individual trustees.
Gotcha.
in addition to investing in the fund. We have
Is
both.
that a requirement?
No.
No.
Hey, good idea.
Good idea,
Yeah.
yeah. How often do you pay interest?
How often do we pay on the fund? We pay monthly.
Monthly. Okay,
Yeah.
and is there a potential to reinvest?
Absolutely. So you have two choices. You can reinvest the earnings, or you can take monthly distributions, and you can actually switch between the two. We request no more than twice a year, but it
Fair
can be
enough.
done. So you can decide, hey, I'd like to take monthly distributions, and then later on you say, you know what, I'd like to reinvest my earnings. So
And if an investor wants to get his money out?
then they put in a redemption request, which is a call or email to us. Now there is for first-time investors, or for all investors, there's a 12-month lockup, and that clock starts ticking with your first investment with us. But as you add to your investment, the clock doesn't reset on new investments.
Okay.
It goes
So
back
from
to the original investment date. So if you, for instance, invested with us on January 1st and you were going to add this coming month, next month, November, you'd have just essentially a 2-month lockup on your new investment.
Gotcha. No, that makes
And
sense.
because you will have been invested with us for 10 months.
Okay, now here's a question. What commission do I have to pay to get into the fund, and what load or commission do I have to pay to get out?
0 and 0. So there's no load.
That's pretty good.
Yeah.
I like that.
So it's very clean. By design, I know Mark put a lot of thought into it, as well as you, in designing the fund. And it's a very, if you ever wanted to have somebody review our private placement memorandum and subscription documents, you being our listeners, whoever reviews it will say, this is a really straightforward
Yeah.
fund offering.
Yeah, and you're very transparent too, so that investors can actually see what loans.
Right.
If they're investing in the fund, they can actually see what loans are in the fund.
Yeah, and something I mentioned earlier, 40% of the loans we do are in the funds, the other 60% are through individual trustee investors. We tend to cherry pick the best loans that come through for the fund.
Okay.
Now, it doesn't mean the ones that we're putting out to trustee investors,
Are lousy.
Are lousy.
Yeah.
they could just be larger than what we want in the fund,
Gotcha.
or we just don't have the funds in the fund to make a loan.
And you do more than just first mortgages. You'll do second also, won't you?
We'll do seconds, and right now, I was mentioning at the beginning that we're busier than ever, so we are actively raising capital.
All right, so audience, if you are out there, and hopefully you're out there, and you like what you hear and want to earn what looks like a preferred return of 7% plus potentially more, they call you? No?
Yes, call me, 415-883-2150.
All right. Don't touch that dial. The best of investing is going to be right back. You know what's funny? There's a little mistake on here. The very first one says 290,000 first deed at 7%. Then you go down below and it says investor yield 7.5. The next one over has 380,000 at 7%, and the investor yield's at 7. The next one's 7.5 at 7.5. Is it 7 or is it 7.5?
Okay,
Yeah.
Okay.
I just
good.
Yeah.
Can you tell me which loan that is?
It's 1629 Seminary Street, Napa. It's the very first one when you go on to private money loans and you ask for offerings.
Okay. I'm gonna email John right now.
Oh, is he the one?
Yeah.
Well, he gets a little piece of that, right?
Yeah. 729.
1629 Seminary Street.
Okay. 62.
I just want to see is it 7 or 7. I mean, you could do that probably at 7. I mean, I like it's very nice. It's very clean,
Mhm.
I mean, because this is the way a lot of companies do it.
Yeah.
Like the second one, 380,000 first deed, 7%, less than 60% LTV, loan, 17 months remaining, Sacramento. Okay. Where did these loans come from?
I think they came out of us and maybe Series Pacific even.
Oh, really?
Yeah. Yield just 7.
Okay, we got one more segment of 5 minutes.
Okay.
I got a question.
question for you. Oh, and it says like 8 days to go, or 23 days to go. What happens after 8 days? You take it off the table? Or?
I think we take it off. Yeah.
Okay. And what happens if two people? I mean, is it first come, first serve?
Yeah. There's does it say fractional? Because some of them are fractional. You can. You know, let's go back to well, maybe we can read.
Yeah, I don't want to get too.
No, get too.
Yeah. So right now there's just the 3. Okay. Which is fine.
After
Yeah,
you know,
right here.
take a look at it when you're done. Yeah.
Hey, good, Aaron. How are you? Oh, okay. I don't know if my wife is home. If you go down the driveway, you'd see just my white. If you see just my white car, then there's nobody home. If my wife's black Range Rover is there, then she's home. What were you guys wanting to do? Because it's 5 o'clock already, which is fine. I mean, but 2 units, right? They didn't tell you that? No. Yeah, we actually are getting 2 units. Yeah, one's on one side of the house down below, and one's on the other side. Huh. Okay, how long will you guys be there? I mean, I can tell you where the first one is. Yeah, they're inside the house, which I believe I left the laundry room open. So if you go, so are you actually at the house right now? Yeah. Okay, so you see where the gate is, where we have the mail, where we have the number 21. Okay, so if you go through that gate and go to the left, there's like 6 or 7 stairs. And then as soon as you hit the first door on the right, that's the laundry room. Okay. And that's there's one of the units is there. And that's the easier one to get to. The other one is on the opposite side of the house, and that door is probably locked. Okay. I mean, you guys will be there for a couple of hours probably, right? Okay, and I'll be home before an hour, so stick around, and because I only work in downtown Santa Fe. All right, very good, Aaron. Thank you. Okay. Yeah. Uh-huh. No animals. Good. Okay, thank you. And I know you guys will be extremely neat. Yeah. Okay, thank you. Okay. Bye-bye. We didn't have an air conditioning unit, so we're getting one. But unfortunately, the way the house is, it's left side, right side, rather than up, down. So we have to get 2 units.
Oh, man.
It's just crazy. Okay, how are we finishing this off?
Let's see.
Are you planning on doing any besides the webinar? Maybe we have people ask you, or just say you did one in Mountain View.
Mm-hmm.
Usually do it in Novato, and people want us to come out.
Let us know where. Email in, and say we're contemplating Walnut Creek, but we're open to points further south than on the East Bay.
We only have 5 minutes. So.
Yeah.
Welcome back to the Best of Investing. Last time for today, I'm Edward Graham, your host, along with Nam Fawn of Pacific Private Money. We already asked our trivia questions. So, Nam, I know that in addition to the webinar, you guys have done live presentations at your office in Novato. You usually get around 10 to 15 people.
Right.
Do it like right after work, and with traffic and everything, that's got to be really hard for a lot of people to visit you. So have you gone to other places?
Yeah. So it's funny because we've held probably 10 or 12 in Novato in the year and a half we've been there. And sometimes people won't even drive from San Rafael, which is really sad. Because I'm wondering, I'm earning 1%. I've got 200,000, that I'm earning 1% on. Maybe I should just drive to Novato and see what's going on, and I can earn 7-8 times more. But it's 20 minutes to get there. I'm not going to make that drive. That's just drives me crazy. But so to accommodate, no, we've had the webinars. So we have people out of state. We have investors
Really?
call in, participate. We had an event in Mountain View in September, which was very successful. So we're looking to do and get on the road more. So actually, it's a question I would pose to our listeners. If we were to hold an event, where would you like us to hold it? Our thoughts for one of the Walnut Creek or perhaps San Ramon, somewhere along that 680. But definitely open to other ideas, maybe San Francisco. We have some investors there.
And I've been to your events, and you always have like good food and drink.
Yeah. So there, we're always hosting. We provide, because it's right around dinner time for a lot of people, appetizers and drinks and things like that. But I know with the holidays coming up, it's going to be a little bit more problematic. So that's why we did a webinar for this next one.
Smart.
Not sure yet what we're going to do for
December,
the end of the year, if we're going to do one. But maybe at the very least, we do a webinar. And then in January, we have our fund investors.
Oh, yes, that's right. The big gala.
Yeah, the big gala at Spinnaker on January 25th. So
That's
we're
it's,
excited to have everyone out.
it's gonna be the same. That was what it was last year.
Uh-huh.
Spinnaker on January 25th.
I
wasn't
believe it was, yeah.
You have
yeah.
the same place?
Same place, same.
Food was
Yeah,
excellent.
food was great. So we're very excited to really celebrate, the faith that our investors have in us.
Another successful year.
Yeah, another successful year.
I mean, you've never not paid distributions.
Yeah, it's been very, very consistent.
Okay, here's a question that we've got to ask you. How many loans do you have in the portfolio?
We have I believe 87, 88.
Okay, but you've gone through a few cycles.
Oh yeah,
so,
yeah.
okay.
We've had total over 160 loans that we've put into the fund.
Okay.
Um,
How many loans have gone bad?
None. Well, no, we've had a few that we've filed notice of default on, or there are a few that are beyond maturity. We tend to work with the borrowers and one shot. We've had to file a notice a couple of times, and we've foreclosed on two. One of which I believe just sold at a profit. So I think there's going to be a boost in the yield.
Okay, so you haven't lost any money for the investors. That's
no, and this goes back to not having lost any principal for investors in the 1,200 plus loans that we've done since 2008. So not
That's
just
just
for the fund.
Yeah, I got you, for the individual people who do
Right.
invest. So that kind of says how good your underwriting is.
Yeah. So again, we say no 9 out
Yeah.
of 10 times. We funded 1,200, almost 1,300 loans, over 400 million, and we've had zero losses. So notice of defaults or foreclosures, those happen all the time.
Well, I think the interesting thing too is that you funded during 8, 9, 10, 11, 12 when the market was decreasing.
Right.
So that it's not like, hey, when the stock market goes up, everyone's smart. I mean, you were doing it at a time when things were getting a little bit rough also.
Oh yeah. We were making loans.
Sorry, give out your information one more time.
Sure. Call us 415-883-2150. www.pacificprivatemoney.com, and our next fund event is November 1st by webinar. And call us if you want to RSVP or go to our website.
Very good. Thank you so much. Nam Fong, Pacific Private Money. Another great way to earn over 7.5% secured by Bay Area real estate mortgages. Okay, thoughts for the day. Be kind, for everyone you meet is fighting a battle you know nothing about. And the best way to predict the future is to create it. Tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Excellent.
Do you need to do a 15-minute intro or 15-minute intro?
No, I already did that earlier.
No, Richard.